Welcome back, and let's get a check of the markets on the Wi-Fi Interactive. We have the Dow, the only major underwater. We can see it's down about 47, almost 50, 37 points right now. S&P 500 up about 0.2%, and NASDAQ up 1.5%. Let's check on the 5-day action here. You can see up 7.6%. And for more on the broader markets, we're joined by Victoria Fernandez, Crossmark Global Investments Chief Market Strategist. Victoria, always great to see you here. We've been talking a lot about crypto, but there was also a little other news during the week. We had a huge CPI report that produced an outsized reaction in not only stocks but bonds. What's your gauge of this?
Yeah, I mean, I was actually kind of surprised to see such a huge reaction coming out of the CPI report. Obviously, we knew that inflation was going to start to trend down. Some of that easy deflation that people were looking at as supply chains improved. So we knew, apparel would be better. Used car prices would be better. I actually thought we would see more of a spike in the services component of inflation that would counteract some of the goods decline. But actually, things held pretty well. And so we had that better than expected number. Again, I think the market maybe got a little bit ahead of itself, thinking that this is going to change the path that the Federal Reserve is going to take. I really don't think it does at all. I think they're sticking with a 50 basis point hike in December. They're going to continue to push until they get to that terminal rate somewhere around 5%.
And we're seeing investors pulling out of some of these more defensive plays like healthcare, utilities right now. But how long should people be holding the defensive stance? Should they not be taking the foot off the gas just yet?
So, Rochelle, I think they need to have a little bit of that in their portfolio regardless, right? We were adding to those names. HMOs was something that we really liked previously, adding some of those defensive names to our portfolio over the last few months. That was something we thought was pretty prudent, especially with the idea growth is continuing to slow and the Fed continuing to push and probably into maybe a small recession around spring or summer of next year. However, what we started doing a couple weeks ago was adding some more cyclicality to the portfolio. So I do think investors need to do that. Take advantage of some opportunities to add some of that cyclicality, add a little beta to your portfolio, but don't completely change your strategy. Keep some of those defensive names because, look, we're going to continue to have volatility, whether it's from the Fed, from geopolitical issues, from the events that happened today that we saw. So I think there's a lot of elements to bring volatility to the market, and you need a balanced portfolio.
Yeah, and to that point, do you expect any direct impact on the equity markets from the downfall of FTX or eventually any institutional money ever flowing anywhere near crypto?
Yeah, I think people are going to be much more cautious going forward. I mean, obviously, when we look at our equity portfolios, we have a values-based component that includes governance issues. To catch securities where we don't like the governance components, we would need to check the balance sheets. We would need to like their business models. So we haven't been involved in this sector at all because of those elements in our process. But I do think, like I said, things like this bring volatility into the market and uncertainty. There's going to be increased talk about regulation, especially if we see the House changing and we have a divided government. There'll be more regulation talk going on. So I think it'll bring more volatility and more concern for investors going forward.
Hey, Victoria, I agree. We can't call this a pivot or anything close to it, but I want to pull up the Wi-Fi Interactive and show you the price action for the week. By far and away, the biggest beneficiaries of that huge outsized action yesterday, and it looks like, let me see if I can pull this up here, was tech, up almost 10%. And as I get this, there we go. I'm sorry about the presentation here. There we go. Tech almost up 10%, followed by communication services. Should investors count these out, or is there still a chance of life? A lot of investors still sticking in with a lot of the growth names that were hammered, not necessarily the bigger ones like Apple and Amazon that we expect to be mainstays. But should investors really just start reorienting themselves towards the cyclicals, or can they still maintain some of that older growth portfolio?
No, dear, they can maintain some of that portfolio in there, but I would be very careful when it comes to these large tech names. I mean, obviously, we had the 10-year Treasury drop, 26 basis points in one day. I mean, it was an incredible drop. And those longer duration stocks are really going to benefit from that. And that's exactly what we saw with the tech names. So the fundamentals didn't change. A lot of the concerns about exporting our technology, concerns about sales being pulled forward and chip issues, none of that changed because of what happened with the CPI number. So I would be very cautious in jumping in and trying to chase any names. But again, keep that balanced portfolio, have some growth, have some cyclical, and I think you'll be able to weather the volatility through the rest of the year.
And obviously with that one CPI print puts a little bit of pressure on the Fed to perhaps try and ease back. But as the Fed says, they need the consistency of seeing inflation go down. But in terms of some of the things that are outside of the Fed's control, you mentioned geopolitical issues. What else is going to be weighing in terms of volatility?
Well, I think obviously the midterm election was a huge thing that we wanted to get through, and we actually don't even have the answer to that yet, Rochelle. So we're still waiting for that. So we could have some volatility depending if some of those races end up turning out a way that people aren't anticipating. We mentioned the geopolitical issues that are going on. We have the G20 meeting coming up next week. Obviously, I think if we see other central banks pushing even further and hiking more than expected, that'll put more pressure on the Fed to do what they need to do. And look, next week has a ton of data coming in and earnings. We've got retail sales. We've got tons of retail earnings coming in. Home Depot, Lowe's, Walmart, Target, lots of news on the consumer. And that's what's really holding up the economy. So if we see some of those things start to falter, then I think we could have that additional volatility you're talking about.